Home insurance in my market of Surrey and the Fraser Valley, or, well, over the whole lower mainland of BC for that matter, is becoming a real problem. And hopefully in today's video, I can help you understand a little more about what you need to know about home insurance with a particular focus on strata properties, because that is where most of you watching this channel will probably end up buying one, because first-time buyers seem to watch this channel more often than sellers. And of course, people only getting into the market for the first time are often buying lower priced properties, which again are stratified here in BC by the way of apartment style condos and very often attached townhomes. So hopefully this video helps you navigate your own insurance situation a little bit better. And if you're currently in the need of a home insurance quote, I'll have an affiliate link in the description to a company that I personally use called Square One, but more on them a little bit later in the video. And of course, if you like to learn about real estate, please subscribe to the channel so you can stay up to date on the Canadian market. Or if you found this video because you are struggling with your own insurance premium right now, please click the like button so that YouTube can help get this information out to other people in the exact same situation as you are. And hopefully we can educate even more people about home insurance. Okay, so where do we start? First off, let's say if you have a mortgage on your home in Canada, your lender is most likely going to require you to have home insurance. But when it comes to condos and townhomes, technically the Strata Corporation is the one required to insure the structure. And in fact, insurance is often what makes up the largest chunk of your monthly maintenance fee. But then as a homeowner or tenant within a strata, or landlord for that matter, you need or at least should have your own policy that covers even more things. Mainly, these are what we refer to as the three major points of contents, improvements, and strata deductibles. Let's start off with contents because that's the easy one. Contents is pretty self-explanatory. The strata is insuring the building, but you must insure all of your stuff inside. So if the building burns down in a fire, the strata policy will rebuild it, but you likely won't have any allowance for replacing your clothes, your couch, or the dishes that were lost in the fire. So your policy should cover all of that stuff up to a certain dollar amount. Obviously, the more stuff you claim to have, the higher dollar volume of that policy you will want to buy. And that will likely come with a higher premium as well. Next up is improvements. Again, the strata has its own policy. They will replace the building that burnt down if it does. But what they won't do, or what won't be covered, are the improvements that you have made to the unit. What they will insure is what was originally installed by the developer. So if you replaced the carpets last year with a similar builder's grade to what was there originally, the Strata's insurance will replace that. But if it turns out you don't like carpet and you update it to $25 a square foot walnut hardwood flooring, well, you had better make sure your policy covers those improvements. This also goes for many other things, for instance, like a kitchen renovation or anything that was a better quality or higher cost than what originally came with the unit. Now, before I get into the most important part of this entire video, I'd be remiss that if I didn't add on top of these three largest parts of your policy that owner, tenant, and landlord policies also may contain extra liability coverages. And they could even help you put yourself up in a rental or hotel should any claim cause you to need to leave your home for any period of time. Now, I'm not in insurance, but I am a real estate agent, a homeowner, and landlord. And having had claims myself and other insurance issues in the past, I will let you know that when I choose home insurance now, I use Square One. That's because I had an issue with a previous policy from another insurer. Square One was the insurance company that helped me find a solution to that problem at an affordable price. And the truth is that Square One did not come to me to ask to advertise on this channel or the Tom Story Show. Nope, I actually liked their product and service so much that I asked them if I could become an affiliate. And thankfully, Square One said yes. So if you do need insurance, please know that Square One is a really good option for homeowners, landlords, and tenants. Using the link in the description below this video, you can start your free quote today. It's an easy to use online quote with no hassle or haggling with salespeople. and it's also affordable. So go to squareone.ca/Karrasch, and Square One will even give you $20 off of your policy just for using the link below. But now let's get into why I ended up using Square One for myself. You see, in 2021, I bought a condo in Surrey for investment. I found a property that was actually having strata insurance issues at the time, and as a result, I found it to be undervalued. Since then, those issues have been resolved, but in order to resolve those issues, the strata had to increase the strata deductible for water loss. When they did this, my previous insurance company wanted to double my fee for basically the exact same policy that I already had. And Square One was the company that saved the day with a reasonable rate for a great policy. And that leads us now to the most important part of this video. The third part of your landlord or owner policy of a strata unit has to do with strata deductibles. You see, it works like this. Say you live on the top floor of a high-rise, and say you flood the bathtub because you forgot to shut off the water before you fell asleep drunk in the tub after a wild night at the club. Well, there's a good chance after you sober up later on, you may have flooded every unit below yours. And let's say that damage totaled upwards of $400,000. Well, there's a good chance that the strata will take care of those repairs with their policy because so many units in the building were damaged. But with every claim, there is a deductible that the claimant must pay before remediation can take place. In this case, let's say that that deductible starts at $100,000. So the strata pays their insurer, and then the units below yours are fixed. And maybe your unit too. But when the strata finds out that you are somehow liable or negligent in the flooding, well, guess what? They're now going to charge you back the $100,000 deductible because the whole thing was your fault. And that is why you need strata deductible insurance. So you can have a policy that covers their policy. And now maybe your bill goes from $100,000 to maybe as low as about $1,000. But now here is the crazy part. Strata water loss deductibles used to be $5, $10, or $25,000, but now we're seeing small ones being $50K. And when you see strata water loss deductibles get as high as about $100,000, your personal policy will likely double. Now, it's at this point that many insurers may not even offer coverage, and this continues all the way up to about $250,000. And might I suggest that if you're looking at buying a strata property with $250,000 water loss deductibles or higher, that might be where you should start looking elsewhere. Because, well, that's a really high number. It's going to add to your insurance costs every year, and I don't recommend that you buy in a building with that much cost and liability in regards to insurance. And if all this insurance talk seems like way too much to navigate when you're looking at buying your next home in Surrey or the Fraser Valley, well, you can book a call with me using the link in the description below, so me and my team can help you with your next move. Thank you for subscribing, clicking the like button, and we'll see you in a couple of days.